dollar strong by keeping inflation low, and by creating a stronger economy through policies which support the recovery and therefore cause more capital inflows to the United States. So those are the kinds of policies I think that in the medium term will create the conditions for an appropriate and healthy level of the dollar. So I don't think I really want to address a hypothetical, which I really don't anticipate, because I think that the policies that we are undertaking, notwithstanding short-term fluctuations, will lead to a strong and stable dollar in the medium term.
Mr. Chairman, Anthony Mason, CBS. This is that rare news conference that actually makes news before it happens. Can you talk a little bit about your decision to take this historic step of holding a news conference after a Fed meeting, why you chose to do it, what anxieties you may have had about doing it, and how, say, facing the media compares to facing Congress?
Thanks, Mom. Well, the Federal Reserve has been looking for ways to increase its transparency now for many years, and we've made a lot of progress. It used to be that the mystique of central banking was all about not letting anybody know what you were doing. As recently as 1994, the Federal Reserve didn't even tell the public when it changed the target for the federal funds rate. Since then, we have taken a number of steps. A statement with includes a vote. We produce very detailed minutes, which are released only 3 weeks after the meeting, which is essentially a production lag. We now provide quarterly projections, including long-run objectives as well as near-term outlook. We have substantial means of communicating through speeches, testimony, and the like, and so we have become, I think, a very transparent central bank. That being said, we had a subcommittee headed by the Vice Chair of the Board, Janet Yellen, looking for yet additional steps to take to provide additional transparency and accountability. And the press conference came right to the top, because this is an area, first of all, where global central bank practice includes now, many central banks do use press conferences, and we have some experience with them. And secondly, it does provide a chance for the chairman, in this case, to provide some additional color and context for both, in this case, both the meeting and the projections that are being made by the committee. So we thought it was a natural next step. We're not done. We're continuing to look for additional things that we can do to be more transparent and more accountable. But we think this is the right way to go. And I personally have always been a big believer in providing as much information as you can to help the public understand what you're doing, to help the markets understand what you're doing, and to be accountable to the public for what you're doing. Now, of course, the Fed didn't do this for a long time, and I think the counter-argument has always been that if there was a risk that the chairman speaking might create unnecessary volatility in financial markets, or may not be necessary given all the other sources of information that come out of the Federal Reserve. It was our judgment, after thinking about this for some time, that at this point, the additional benefits from more information, more transparency, meeting the press directly, outweighed some of these risks. And I think over time, we'll experiment to try to make sure that this is an effective a venue as possible.
Mr. Chairman, Ken Rogoff and Carmen Reinhardt wrote a book looking at 800 years of financial history and discovered that when you have a financial crisis, it takes a lot longer for the economy to recover. Are people expecting too much from the Federal Reserve in terms of helping the economy recover, and has that complicated your monetary policy making?
Well, let me just say first that Ken Rogoff was a graduate school classmate of mine, so I've known him for a long time. I even played chess against him, which was a big mistake. And I enjoyed that book very much. I thought it was very informative, and as you say, it makes the point that as an historical matter, that recoveries following financial crises tend to be relatively slow. Now, what the book didn't really do, though, was give a full explanation of why that's the case. Certainly part of it has to do with the problems in credit markets, and my own research when I was in academia focused a great deal on the effects of problems in credit markets on recoveries. Other aspects would include the effects of credit problems on areas like housing and so on. And we're seeing all that, of course, in our economy. But that said, another possible explanation for the slow recovery from financial crises might be that policy responses were not adequate, that the recapitalization of the banking system, the restoration of credit flows, and monetary and fiscal policies were not sufficient to get as quick a recovery as might otherwise have been possible. And so, we haven't allowed that historical fact to dissuade us from doing all we can to support a strong recovery. That being said, it is a relatively slow recovery, and you can identify reasons for that. I mean, credit factors are one. Another very important factor is that this was triggered by a bubble in the housing market, and the housing market remains very weak. And under normal circumstances, construction, both residential and non-residential, would be a big part of the recovery process. And so there are a number of factors, and now we're seeing high oil prices and other things. There are a number of factors which are holding the recovery back. So there are good reasons for why the recovery is slower than we would like. At the same time, it's very hard to blame the American public for being impatient. Conditions are far from where we would like them to be. The combination of high unemployment, high gas prices, and high foreclosure rates is a terrible combination. A lot of people are having a very tough time. So I can certainly understand why people are impatient. And I guess the only thing I can say is that while the recovery process looks likely to continue to be a relatively moderate one compared to the depth of the recession, I do think that the pace will pick up over time, and I am very confident that in the long run that the U.S. will return to being the most productive, one of the fastest growing and dynamic economies in the world. And it hasn't lost any of the basic characteristics that made it the preeminent economy in the world before the crisis, and I think we'll return to that status as we recover. Thank you very much, and thank you for coming.